Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ben Jones, Product Development Specialist with Nasdaq's Index Research Team for a review on Nasdaq's U.S. benchmark industry index performance for the second quarter and first half of 2020. Ben, it's great to have you with us. Welcome to Trade Talks.
Yeah, thanks for having me on again.
All right, Ben, and let's take a look at your first couple of slides here where you review Q2, and then we'll get into the first half of 2020 performance.
Right, yeah, so yesterday was the close of the second quarter, and again, it was a kind of a 180 from what we experienced in the first quarter of the year. And what you see in front of you is looking at the Nasdaq U.S. benchmark indices and looking across the different industries. And what you can see is basically performance since the beginning of Q2, so the beginning of April to the close of yesterday. And if we look at the leading indexes, we see that the industries are predominantly kind of the growth-oriented areas, right? Consumer services, technology. I mean, those are the areas that provided a lot of outperformance this quarter, and that's something that we've talked about in a lot of these different Trade Talks videos. When we're talking about the Nasdaq 100 or talking about a lot of these thematic indexes, that's where we have seen those strong returns. The previous quarter, looking at the technology benchmark index up about 31% for the quarter. Those sectors and industries that lagged this past quarter were predominantly, defensive in nature, right? You think, utilities, which was up only about, 1.84%, telecommunications of about, 7.3, and then, financials of about, 13.28. So again, it was a quarter that favored the more growth-oriented, or, some would say the or at least perceived as riskier industries, Jill. But then if you, take a step back and look at the performance for the year, which would be the next slide, we still see that a lot of those trends are still intact, right? Technology has been the favored, industry. Consumer services, again, favored. We also see industrial showing up. Industrial is about 21%, for the year. Looking at, that particular industry. If you look at, let's say, 2020 in a nutshell, again, it's kind of a tale of, maybe, two halves, right? And really technology has been just the dominant industry. Healthcare is about second place. It's just kind of scratching above the line and kind of in positive territory. The major laggard this year is oil and gas, where you're seeing that basically an investment in the oil and gas industry at the beginning of the year is still almost, cut in half, right? And so that's, something that we're paying attention to is, again, that it's been a year, favoring, kind of growth sectors like technology, consumer services, as well as healthcare.
Yeah, certainly capitalizing on that work from home trade, that's for sure. So Ben, let's drill down more and take a look at sector performance specifically.
Yeah, so if we, look at some of the different performances that are out there, I think, something to pay attention to. There's a lot of, kind of noteworthy, buzzworthy, viral sectors out there that you see a lot of chatter about. These are the airlines, the pharmaceuticals, travel and leisure. A lot of these sectors have really been impacted by, how life and work has changed in response to the COVID-19 pandemic. No one's traveling, no one's going to hotels. You see, how the airlines, sector on the right-hand side has been one of the worst performing sectors this year, basically cut in half. On the other side of the coin, though, you see that pharmaceuticals and internet and software companies have really responded well this year as well as this past quarter. Looking at, let's say, for the quarter, you're looking at software and computer services. It's kind of the leading sector, followed by a positive response from travel and leisure. But again, travel and leisure for the year is still in negative territory. So this just shows you that if you just stick with the leaders right now, those have been the ones that have been really working in Q2 as well as when working throughout the year. So it's kind of interesting, right? There's just a lot of chatter about what's happening in the airline space, but it's still lagging considerably what we see in software and internet and pharmaceuticals.
Okay, Ben, and moving along, let's take a look at Nasdaq 100, that particular index, and its performance for the second quarter and the first half of 2020.
Yeah, so if you look at the Nasdaq 100 and then the other indexes that kind of fall under the Nasdaq 100 index family suite, so kind of different variations of it, right? So if they equal weighted or excluding technology or just only including technology. You can see on the left hand side that it's all, 4 indexes that track, kind of this Nasdaq 100 universe, they're in positive territory for the quarter, right? Very strong quarter for the Nasdaq 100, up about 29.99%. Really, the only kind of particular index that did kind of lag, or at least on a relative basis, would be those that the index that excluded technology, right? But again, it was up 27.38% for the quarter. So overall, very robust quarter for this family of indexes. And again, it was a quarter that really favored the growth-oriented sectors and stocks. If you look for the year, we start to see some separation, right? When on the right-hand side, to looking at just 2020 performance for the first half of the year, you can see that there is some separation for just the traditional Nasdaq 100 index against some of the others, right? And a lot of that separation kind of began off of that March bottom, where it responded kind of in a quicker fashion, and also didn't experience as large of a drawdown as some of the others. But that said, I mean, you still see positive returns across the board for the equal weight, for the X-Tech, and even for the technology sector, Nasdaq 100. So overall, again, this just kind of confirms the themes and the trends that we've been talking about the last few months, how the growth style box has really been the preeminent style box this year, as well as in Q2 2020.
All right, Ben, and let's quickly wrap up with global equity performance.
Yeah, I think it's important to kind of have a global context, right? We've been focused on kind of how U.S. equities have done, but how have some of the international markets done, and how have they done relative to U.S. equities? And so, put together a couple graphics showing you kind of the Nasdaq U.S. benchmark index versus emerging markets and developed markets excluding North America, right? So U.S., Canada. What we see is just U.S. equities really led throughout the quarter. We did see kind of a pronounced return from developed markets, but not enough to kind of take first place. So you can see the international markets really lagged U.S. equities this past quarter. Between developed and emerging, they've been kind of neck and neck. So there's a lot of parity there for the quarter. How does this translate into long-term themes? You just see that they're still, underperforming and trailing kind of U.S. equities for the year, and that's on the right-hand side. Even though the benchmark index is in the red for the year, you can see just, how a $100 investment in, let's say, developed markets is in the red. You can see how, emerging markets have lagged. So positive quarter for, most equity-like investments across the world, right? You can see how, emerging markets are in positive territory, developed markets are in positive territory, but it wasn't enough to get them back into black, so to speak, get them back into positive territory for the year. So again, it continues just to highlight just the strength in U.S. equities, and then all the other slides that we looked at, just the strength in some of those, growth-oriented style boxes and the growth-oriented sectors. And that's been really the theme in Q2. And it'd be interesting to see kind of, if it's a theme in Q3 or maybe if it's something else.
All right, Ben, thanks for joining us as always, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.